Hey everybody, this is Jim at SP500chart.com. It's a little late on November 29th, 2012. It's about 10 o'clock. Put in a 12-hour day today in my work, and I'm just beat, but followed the market the best I could throughout the day, and we're going to take a look. But before we do, I need to remind you that SP500chart.com and this video are for educational purposes only. Nothing stated in the video or in the website is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research, and you need to make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. It's funny, I could remember that tonight. I normally read it. It's on my screen. I just read it. But all of a sudden, it's clear as a bell to me. Whereas yesterday, I was going, I was just kind of, maybe I was just tired. But anyway, let us take a look at what's going on. We are now significantly above the neckline of the old Head and Shoulders pattern. That's actually maybe a tad surprising, because necklines usually put up a heck of a fight. Tell you what, let's go to a 2-hour chart. My lines are going to get a little funky on me when we do the 2-hour thing, maybe. Well, that's funny. On my laptop, it doesn't do that. On my desktop, when I go to a 2-hour view, none of the lines fit. So maybe it's a graphic driver thing. Well, some of these are kind of funky. But anyway, here's our Head and Shoulders pattern. Left shoulder, which in itself was a Head and Shoulders. The head, which was crowned by a triple top. Right shoulder was not very well formed. It looked like it was, I kind of expected it to play out in that 1415 to 1432 range for another week and a half before the pattern would break down. But the election results sent the markets down. And just to be blunt, that's what happened. So anyway, you can see that the target from that Head and Shoulders pattern was about 1342. And if you look at this little tail of a candle right here, you can see that it got down to roughly 1344, let's call it. So it still looks a little strange to me that we would spend almost 3 months in this Head and Shoulders topping process, and then we would sell off for a week and a half, and it's done with. That doesn't seem to be typical. So I think what we ought to do is we ought to consider the fact that this right shoulder maybe never fully formed. So we got the move down, and on the pullback, there just wasn't quite enough buyers on this right shoulder, which a lot of people, by the way, would call a sucker rally. And if you're smart, you sell on the sucker rally if you're in it, if you're long. So it could be that there just weren't quite enough buyers up in this range to create adequate selling pressure when we return to the very bottom of that range. So my question will be this, because I think we're going to get up to the low 1430s. My question is, when we get up there, are we then going to come back down to 1408? And maybe at that point, we have to ask ourselves, would that neckline break again? Here's the thing that would work against that, and that is the fact that we now have this downward leg has weeded out a lot of the buyers. So in other words, if we'd gone sideways for another week and a half, we would have built up more surplus of shares market-wide in that range that would create more selling pressure once that range broke to the downside. We didn't have as many sellers, as many buyers in that range, so therefore there weren't as many sellers who wanted to get out of that range. But let's see what happens if we come back up to this 1432 area. I frankly am kind of expecting that we would then start to bounce around again between 1432 and 1408. If we look at things on a really short-term basis, looking at a 5-minute chart, I think you know what I'm going to say. Here is our resistance line that has been overcome. Today, we got a little back test to that line, and the market rallied nicely. If you want to, let me bring up my drawing tools here. Put a little trend line right here, and we could even put another one right here maybe. Now, how do I make my drawing tools disappear? Is this going to do it? Nope, that doesn't do it. There. So could it be that what we're looking at here is the formation of a little consolidation pattern that would point to a move, possibly directing us right to that 1435, mid 1430s. And the reason I say that is we came off strongly off of 1386, come up almost in a straight line, consolidate, and you know what they say, oftentimes these consolidation patterns form at roughly the halfway point between the move. So I would be, like I said, I've thought all along that if we could get over this neckline area around 1408, that the next the next 27 or so, 28 points in the S&P should come pretty easily. If we back out from this chart just a little bit more, you can see, well, look, I mean, you just don't see anything going back for 2.5 weeks. If we go back even further, you can see that what we really have is we have this gap down back in a fairly early November, and then we formed a bottom, and since this gapped down, we may find some resistance at that gap level, which would be about 1428. So it wouldn't surprise me if we hang up around 1428, because you can see that this gap right here might create gap resistance. So guys, I'm still going to expect a move up to 1435. Now, let me think ahead, and this is not something that is currently in the chart, but looking ahead. If we come up to this level, and then we sell back down to this line, to the old neckline as support, and then bounce back up to this line, probably, let's say, in 2.5, 3 weeks, just guessing, purely guesswork here, total speculation. If that were to happen, then what would we potentially be looking at? Well, we could potentially be looking at this pattern between these yellow lines as essentially a bull flag, and the formation that includes most of that bull flag and the breakout from the bull flag, which we are now in. If we come up to this, then sell back down for a couple weeks and come back up and take out 1436, then we will be looking at a fairly decently sized inverted head and shoulders pattern that would point us to a nice move. And since this line is almost horizontal, we can actually measure it now. If we were to get that breakout, we have a potential move up to roughly 1527, 1528. I'm not calling that right now, but I'm saying that wouldn't surprise me. And 2/3 of the pattern that we would look to potentially propel the S&P up to that level looks to be in place. Again, it gives me a little concern, the fact that we had an almost 3-month long pattern, head and shoulders top, that just sold off lickety split, and now it's just decided to reverse and come back up. I don't think that makes a whole bunch of sense if we look at the S&P chart over the past 4 years. Or if you look at charts, I mean, I'm looking at the S&P since the 3.9 bottom, because I think that bottom probably set in play kind of the first wave, if you will, and now we've been getting these waves and wavelets. I'm not an Elliott wave guy, but what I'm saying is that we haven't seen this kind of short-lived breakdown from a head and shoulders top, just one swift move down, then boom, then we're right back up. We haven't seen that. We usually see a break of the pattern, then a lot of volatility as the bottom is really worked out and put in. And I don't think we've really seen that here, but I'm not saying that that couldn't be the case. So what I would look for going into tomorrow, 1435, 1436 is resistance. I now think this neckline will probably now offer some support. But if we get up in between this range, between 14.8 and 14.35, then we start looking for a sign of either a taking down of that neckline again, or breaking out over this line that then should be the precursor to a move over 1500. Now, if we get into the 1500s, 3, 4, 5 months from now, I would start looking for the signs of another top. And I think if we get that top at that level, I think we have to look at the really long-term chart and think about what the implications are of a move up to, if you don't mind me saying this, potential triple top territory when we start looking at a monthly chart. We're not there yet. If we get there, we'll look at it. Guys, I've gone on long enough. This dang video is going to take forever to upload. Thanks for watching. Thanks for your subscription. Thank you for your patience.